Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So in this video we are going to be talking about why my confidence is very high on a correction in the next few days, in this coming week most likely. And I'm going to talk about the few things that I'm looking at on the charts that indicate to me that there will be a potential correction. We'll also cover targets for a potential trade if this starts playing out. And then finally, we're going to be seeing if this breakout is actually the real deal. Is this, correction going to potentially morph into something bigger than just a simple correction, or is this going to be another stock market crash leading into 2020, just like we had here a stock market crash leading into 2019. We'll see if the exact same thing happens or not. Now, the first thing that I'm looking at on the charts is the RSI divergence at peaks. So this is why I have the chart settings on area. And it's simply because we actually see this a lot better than with the candlestick charts. I'm going to go back to the candlestick in just a few seconds once I'm done explaining this. So ever since the September stock market crash began right here, led into here, we've seen a multitude of RSI divergence at peaks. You can see all the red lines here, one here, two, one here, and another potential that we're seeing right now. So you can see a combination of two things were happening every time before a correction or a crash. So first of all, we have the RSI divergence. We have seen the price go up, making two consecutive higher peaks, while the RSI goes down, and you can see that the same corresponding spots are actually making a lower high as opposed to a higher high on the price. And so same thing here. This you can argue is not divergence just because the price was actually to the same level. But in my experience, divergence actually applies to situations where the price reaches an equal level, but the RSI goes down whilst the price stays the same. It is divergence too, at least in my experience. And look what happened. We did have a decent size correction again. Same thing here. We have the RSI divergence. And the second thing that we see each time is a break of trend line. So again, here we have the trend line before the stock market crash. Here we have another uptrend line that was broken right during this RSI divergence, and another trend line here that was broken following the RSI divergence. We have the break of the uptrend line, but we do not have the RSI divergence just yet. We almost have it. We're just shy of it. I think we need, half a percentage point more to get that divergence. But I'm fairly confident that the market will push up the price to get that RSI divergence. And you can see that, if we go above, half a percentage or maybe a percentage point, the RSI will most likely do something like this, and we'll have clear divergence, and probably, we'll have a correction following this RSI divergence and break of trend line. So currently we do have two major signs that a correction is coming in the next few days, few weeks. We'll see. Now, the second thing that I'm looking at on the charts is the MACD, and I'm going to cover that a little bit quickly because this is not the first time that I say this, but we do have a MACD crossover. So the blue line crossed down on the red one, the faster moving average crossed down on the slower one, and that is in the shorter term bearish. So again, the market always acts like this. Even in an uptrend, you have counter corrections Even if the general direction is up, you always have these counter corrections. And I think for now, this uptrend has come to an end, and we will see the counter correction that is only healthy and normal in an uptrend. Even if you are long-term bullish on the S&P 500, you will see corrections along the way, and that it's normal. And I think that's what we're going to be seeing in the next few days. I think upside is limited for now on the S&P 500. Now let's take a look at the target levels. We're going to put this down a little bit. So this is where this triangle pattern comes in. We have a downtrend line here. I'm going to go back to the candlestick charts right there. We do have a downtrend line here capturing 1, 2, and a third reaction, but with a breakout here. We did have a reaction, but we ended up pushing through this downtrend line. And obviously we have this uptrend line with, a few reactions as well, forming this triangle pattern that I'm confident will come into play with this correction. I think that will come in and backtest this formation, backtest this downtrend line potentially a little bit later. And this obviously coincides with the previous all-time high. So if you're looking to trade this correction, I think a good, safe target would be right above this downtrend line. So that would be this target right here, this previous all-time high level. Now, when we get there, this is going to be a very interesting moment for the stock market. A lot of people are going to be watching this very closely because of a very simple reason. If we start going lower than this 30-30 level, if we start breaking through this uptrend line as well, then this would make this uptrend a false breakout, and that is a very, very powerful bearish indication that we will see a lot more downside in the coming weeks. Obviously, this can go very well. We can correct, bounce off of this level or bounce off of this downtrend line, and then resume the uptrend. Like I said, this is currently a very clear uptrend for now, and a simple correction would be healthy with a nice bounce and continuing what we've seen here so far. But if we do start to break down these support levels and this downtrend line and this golden uptrend line, if we break past this, then we will see waterfall selling past these levels very quickly, and it could very well lead to a bigger correction and possibly a stock market crash leading into 2020, just like we had right here. I guarantee you nobody was expecting this type of correction back in 2018. People said, we're breaking out, we're going to all-time highs, this is all good, and then all of a sudden we broke the downtrend line and boom, stock market crash. A lot of people lost a lot of money here. So again, be wary of the stock market. I'm not saying that we will see a stock market crash. It is definitely a possibility, but I'm saying be careful with your investments in the S&P 500. We are coming potentially to an end of a very long bull market, and I think it is risky to be heavily invested into the S&P 500 to the long side. So in case we do start to break down past these levels, I do want to lay out one target here, and that would be this one right here, just because of the support levels that we've seen. It would be a reasonable bounce target for a deeper correction, and it would, of the highs, bring us to around 10% correction. That would definitely be a very reasonable target in that case. So I hope you guys enjoyed this video. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.